In this session, we're now going to have a look at our cash payments book, another book of prime entry. Now, this represents the other side, or the other half of the cash book. We're now looking at payments out of the bank. If you remember in the last recording, we had a look at payments, or receipts even, into the bank. So, we're looking at the other side of the cash book now, our book of prime entry, cash payments book. And if you see, it looks very similar to the cash receipts book. The date, the narrative of the payment out of the bank. Well, we have wages, we pay for our water rates, we pay our suppliers, Paul and Joanne. Do you remember them when we looked at the purchase day book? Yeah, a few videos ago. We shall see those suppliers coming into play again. We have electricity expense as well that we've paid. The total that we paid out of the bank we can see here. And then we're going to analyse the payments out of the bank. So what did we pay? Well, did we pay our payables, our suppliers? Did we pay wages? Okay, did we have a wages expense? Did we pay for our utilities, our water and our electricity? Every payment must be analysed into a column. Okay, so if you paid, let's say, rent, you would have a rent column, and so on. It would continue like that. Also, your cash purchases would come in here as well if you did make any. And again, there would be a cash purchases column. Notice then we have a column at the end, which is shaded. And this is for discounts received. So where we take a settlement discount because we're going to pay a supplier early. This is going to be another memorandum column. Okay, another memorandum column which we'll need to post a double entry for. Now, like with all day books and all books of prime entry, we do our posting to the main ledger from the totals, okay? Just like all the other day books we've seen in this chapter. So, bank. Total payments out of the bank. Well, that's going to be a credit to reduce our bank asset. Okay, so the total paid out of the bank, well, that's going to our reduction in the bank asset. And again, it's going to keep the bank account nice and clean. Rather than posting 5 credits to the bank, we're just going to post 1 overall credit to the bank instead. Payables. Well, if we're paying our payables, we're reducing our liability of payables. So we're going to debit and reduce payables control. Remember, the posting of the totals goes to the control account in the main ledger. But don't forget that we've also got to post individual debits to reduce each individual supplier's account in the subsidiary payables ledger. So I'm going to do little debits next to supplier Paul and Joanne so we know to reduce the liability in their individual accounts as well. Wages. Okay, or wages. Well, wages are an expense or cost to the business. We need to recognise that expense now, so we're going to debit wages expense and increase our expenditure on wages in the year. Okay, it's another cost to run our business. It would go into the statement of comprehensive income. Finally, then we have utilities, which we post from the total. And again, utilities is a form of expense. So we're going to debit utilities expense and increase our expense in the statement of comprehensive income for the year. Now remember, like we did with discounts allowed in the last session, this time discounts received again will have its own separate double entry. For now, the credit to the bank will equal the 3 debits that we've split down from the totals. So we've done the double entry for the cash payments that we've made in the period. Now we must post the double entry for discounts received from the total. So, discounts received reduces our liability of payables. We don't have to pay as much off our liability as what we initially thought. So we're going to debit and reduce payables control account and reduce that liability in the period. Discounts received is a good thing to us, so we're going to recognise it as income. We're going to credit discount received and increase other income in the statement of comprehensive income, usually just beneath gross profit. Okay, so remember that the discounts received column we need to do a separate double entry for. It's a memorandum column to remind us that we need to record that settlement discount we've received, because we would only take the settlement discount upon paying the supplier. Okay, now if you remember, I think it was in recording number 4, we had a look at the purchase returns day book, and in the recording immediately prior to that, part 3, we had a look at the purchase day book, and we did our postings to the payables control account and also to the subsidiary payables ledger. I want you to pull up that illustration that we did together, if you remember. And where we left it back in recording number 4 is that we credited payables control with the purchase day book and debited payables control with the returns. And then if you remember, we opened up an individual payables ledger account for Paul, Joanne, Billy and Anne. They were our 4 individual credit suppliers. Well, now we're going to do our postings to the control account. So, from the cash payments book then, we said we were going to debit payables control with $250, what we paid to our suppliers. And we also said we were going to debit payables control with the total of the discounts we've received in the period as well. So let's do that. Payables control from our cash payments book. We're going to debit $250, what we paid, but also we're going to have some discounts received, which we said we were going to debit, of $20.25. Now again, apart from a contra, that's what we're mainly going to see in a control account in most exam questions. So, what we're going to do is balance this account off now. We've done all the postings from the books of prime entry. So the credit side is 730.25. So should be the debit side. So $345 is the closing balance, which means at the start of the next period, our opening balance that we need to pay to our suppliers is $345. So we've done the payables control account, we've established the balance, and that balance brought forward in the control account would then get posted to the trial balance and then to the statement of financial position. Don't forget though, we've also got to break down those debits into Paul and Joanne's individual supplier accounts for the amount that we paid to them, but also for the discount that we received from those suppliers as well. So, let's proceed then to go to the subsidiary ledger. For Paul, we paid from the cash payments book, abbreviated to CPB, that's fine to do. 80 is what we paid to Paul, but we also had some discounts received, just abbreviated to disc received, and that was for $6.25. We do the same for Joanne. Cash payments book, $170. And when we also received some discounts from Joanne of $14. Okay. And therefore, we've done all our postings now from the books of prime entry into payables control and now also into the payables ledger. So let's balance off the payables ledger. Well, Paul's account, there is no balance on it. Both sides, quite clearly you can see, equal $86.25. And the same goes by the looks of things for Joanne. The debit side and the credit side are equal, so we don't owe any more money to those two suppliers. Okay? And our purchase ledger clerks would know about that from looking at this ledger. But for Billy and Anne, we didn't pay anything to them from the cash payments book. So Billy will have a balance carry forward of $57.50, which will be brought forward as an opening payable balance on the credit side of $57.50. And then for Anne, $402.50. So $287.50 is going to be our balance carry forward for Anne, and therefore we still owe Anne next year $287.50. Now, do you remember what we did in the last video? We said that with receivables, we had to make sure that the balance on the receivables control account reconciled or matched with the list of receivables balances. Well, we're going to do exactly the same for payables. So, we're going to prepare a list of payables balances at the year end, just to double check that we have done all the postings correctly. Okay, so this is a form of controlling our accounting system. So we had supplier Paul, which had zero balance. Supplier Joanne, which also had no balance. Supplier Billy had a balance of $57.50 brought forward. And supplier Anne, we just calculated to $87.50 as what we owe to supplier Anne. Remember that the total of the list of payables balances must equal the control account of $345. And if you look back at your control account, you'll see that that's exactly the same. They both reconcile, they both match, so we've done everything correctly. Okay? But again, as I've already mentioned before, in our next chapter, you'll be presented with a situation where the list of payables balances will not equal the control account balance, and thus you'd need to correct those errors to make them balance. So again, it's really important in being able to know how to post it properly, so then you can go back and correct someone else's mistakes. And usually that's the way it's tested. So this is really important theory to make you understand the system, but also it's important for the next chapter as well. So, if we go back to the diagram we had a look in video 1 of this chapter, what we have now done is reconciled the subsidiary payables balances to the payables control account in the main ledger. And again, we're going to see that reconciliation again in the next chapter, and also see how we correct errors in the reconciliation. So we've got one more video on books prime entry, which will be petty cash, and that will be in our next video. Thank you.